Hello all. Thank you for patiently waiting for us in the meeting. We had a few technical as well as network issues on our end. Now everything is all right. So let me cordially invite you, Mr. Ganesh, Head of Product, who will be leading today's webinar. So Ganesh, please take over the stage. Thank you.
Thank you, Tarun. Good morning, everyone. Thank you for joining us today on a Saturday morning. And once again, apologies for starting a bit late. We had a few technical issues at our end. So without wasting any more time, I'll just move ahead. So the basic question that we all have, right? Are all blue chips infused with quality? See, what is blue chip, or generally, what does the blue chip mean in our or generally in common parlance? It means that these are companies which are relatively high quality in nature, or supposedly high quality in nature, which is actually considered high quality in nature by the common public or by the investor community on the whole. But then, have we always, so if investing was so easy that we can go behind blue chips and just make money, the history doesn't show that it is very easy, right? Because we have seen people moving towards certain stocks claiming to be blue chips, but then failing badly ultimately, right? We've had many examples. So becomes increasingly important to look at what we are buying, whether it's going to be a blue chip or a relatively smaller company. And when it's a blue chip, it becomes all the more important because the big ones stand to fall much harder than the smaller ones, right? We've always heard that. So how do we put this to practice? Where do we go right now, right? So we need to go towards experts to make sure that our investing, even in blue chips, is of high quality. So that is going to be the first question. All of quality, is it true? Now we've discussed that actually need not be, right? We look at a few examples in the past which have actually been considered blue chips, but then the history says something else about these companies. If you take companies like Reliance Power, Jet Airways, Suzlon, Reliance Communications, ANL, and even Yes Bank or EHFL for that matter, right? These companies were one point of time, but we all know where they are today. So the common misconception is that blue chip investing is easy and blue chip investing is quality investing. But what are actually true blue chips is something that we will never be able to answer very clearly or very on the face of it. You will never be able to say that this blue chip is in pure quality. So even blue chips require a certain amount of introspection before we put our money into them. Question number two would be, what can long-term investing do for you? See, we all talk about long-term investing, right? We all think we know long-term investing, but what does actually long-term investing take? It takes two, not just one. It doesn't require only your patience. It requires your patience and also requires you to keep a strong will on stocks which are doing well in terms of fundamental performance. See, all of us can be patient, or people, some of us can say that, I'll just invest and then forget about the stock. But that doesn't how exactly investing works. Even the bigger companies need you to keep a lookout on them to make sure that the fundamental performance is in tandem with what is expected out of them. So let us look at a company which is actually made, before that, let us look at how Nifty has made, right? It is a broader market which has actually done 16% in terms of value over a period of 20 years. So what does that say? This 16% didn't come out of nowhere, right? It came out of so valuation is always a slave of the earnings in the long term, right? In the short term, maybe there would be short-term inconsistencies with the earnings because the earnings, the valuation might shoot up and it can remain overvalued or undervalued for a predominant or for a very good period of time. But then if you look at it at a long-term period, like 10 or 20 years or 15 years, if you look at how the earnings and the valuation move, they will move in tandem with each other. With that in perspective, let's look at a specific company, which is one of the true blue gems, which has done extremely well for all its shareholders over a period of 18 to 20 years, right? Since it's raised its initial capital of 2,000 crores. So if you look at the free cash flows that it has generated over a period of 18 years, right? It has generated around 3.2 lakh crores. See, this is why it is important. Now, everybody knows how TCS has performed in terms of valuation. That I don't need to put a chart for all of you to understand how TCS has done in terms of valuation. But how did that valuation come into the picture? What contributed to that valuation is something that we all need to know, because this is what drives your valuation. This is what drives your price, and this in the end is what makes you money, right? If you look at TCS, it has generated an overall corpus of 3.2 lakh crores in terms of free cash flows over a period of 18. When they started off, it started off at 1,600 crores. That has actually gone to 42,000 crores in the latest financial year. So it's been a compounding machine, right? We always talk about TCS as the decadal stock. Now TCS, I mean, at the IT sector as the pack itself, nobody is predominantly looking at because of their short-term gyrations or short-term problems, right? But if those kind of problems would have occurred to them or at different time periods as well. And that is how investors would have considered them at that point of time as well. But what has TCS delivered in the long term is a different picture, a completely different picture. And it still continues to deliver on financial performance. And that is what is expected or can be expected out of the company in terms of share price as well or valuation as well over a period of over the long term ultimately, because it has never disappointed investors with respect to financial performance. And for investors who stay in the long term, it's definitely has been a very rewarding stock in terms of valuation. Another question that always, right, comes to us is something that is intricately linked to whatever we spoke about in the previous slide. How important is long-term financial performance? Because we have a lot of our friends, we have a lot of our colleagues or anyone who we know talk about many companies who we, with our basic analysis, also know that the financial performance is not too great, right? They wouldn't be making profits, but then the company share price would go a different way. And some of our friends, whether they're lucky or not, whether they got into the stock with or a specific idea after talking about it with someone else, they would have made money, right? But how important is long-term financial performance when it comes to investing? Because, like I said, it's not very easy to hold on to a stock without holding on to something which can back your conviction. Right. If I have to hold on to a stock for maybe a 10 or 15 years, I would have to have the conviction that stock requires, right? It has to deliver like how TCS has delivered in the past. It has to deliver financial performance. It has to deliver shareholder satisfaction. It has to deliver dividend payouts. On dividend payouts, it has to satisfy the small shareholders. It has to attend to small shareholders' queries, right? And that is when you build your conviction over a period of time, and that is when you get to stay. Because just getting to stay in a stock which does nothing for your portfolio is not going to help. So you need to have a strong hold on the financial performance and track it regularly. And we being office goers or where our core activity is totally different, right? We wouldn't be able to do it completely on a day-to-day basis, which is why we need advisors who can actually help you. Right, that is exactly what TrueBlue does, and how it has, actually, how important is it is something which HDFC Bank can stand as a testament, right? If you look at HDFC Bank, it has been an execution machine for over a period of 20, 25 years or even more, right? See, this is not, and if you look at the latest numbers of HDFC, the quarterly numbers that it had recently released, it had managed to match its entire earnings of FY 2016 in just one quarter of FY 2023. So this is a very, very unique thing that HDFC Bank does, right? So if for every 5, 6, 7 years, the financial earnings of the company, the financial earnings of this banking company is made by a single quarter in the financial year, which comes 7 years later. So this is something that is remarkable by any company for that matter, right? So this is something which shows, markets always expect certainty in terms of earnings, right? This kind of certainty is offered by very few companies and very few organizations intend to do that for the long term, right? Because any company for that matter, if you look at it, it's going to be, or rather any company which is incorporated, it's going to be for perpetuity is what is expected. But very few companies come closer to it, which are companies like HDFC Bank or TCS. And these are the companies that we intend to stick with in terms of your True Blue portfolio. So this is again a True Blue chap, which is actually performed in terms of execution and in terms of price. If you look at how the book value has moved over a period of 10 years, it's a 21% CAGR, where share price has actually moved in tandem with the book value, but not linearly in tandem, right? So on the long term, you can say that they have moved together. But what if you had actually, what if someone had asked you to put in money where the gap between the orange line and the blue line becomes bigger? See, that is where it is today, right? If you look at how much the gap it offers or how much time it offers between when there is a gap between the orange line and the blue line, it is very, very minimal, right? So that is when you need to capture companies like HDFC Bank, where there are other issues in the play, where are other operational issues or other market related or liquidity related issues which can actually undervalue the stock. And that is when you get in, that is when you capture the gap and stay in, right? So HDFC Bank again is at a position today where we have to capture this gap exactly before the HDFC Bank or the shareholders or the market realizes that the gap is getting too big, right? So this is what we do with True Blue. We identify bigger companies or big companies which are intended to grow bigger and bigger over the long term, and which will move in tandem with the Indian growth story, right? That is exactly what True Blue is all about. And blue chip investing, what does it take, right? So now we've identified, or rather we've somehow have a clarity that this is what a blue chip should be, or this is how a true blue chip should be, or this is how a quality blue chip should be, right? So when we have some clarity on that, it is important that we put in a process to make sure that all this identification comes and works out in terms of portfolio performance, right? How can we do it? It definitely needs to come into a process. It definitely needs to come into a framework before, after which it takes care of it by itself. The process, once you put a process and make sure that it is airtight, right? The process takes care of itself. I mean, as long as you know what you are doing with respect to your portfolio. If you look at True Blue, right, this is something that we always tell all our investors, right? If you plot True Blue portfolio against the Nifty 500, which is a portfolio of 500 stocks. True Blue is a portfolio of 20 stocks, which is nothing but 4%. That is 20 stocks out of 500 makes it 4%. And but these 4% of stocks, right, they contribute around 22% of the total profit pool of the Nifty 500. What this means is very, very simple, right? There's a very, very small strata of companies which contribute a great set of numbers for the Nifty 500. And our intention is to capture these companies at the right valuation and run your portfolio for a considerable period of time, because all these companies are going to be delivering good numbers in terms of profitability. And like I had already said, these are all big companies which are poised to become bigger in terms of the India story. And how is a true blue portfolio constructed, right? What is the essence of a true blue portfolio? These are the four pillars, right? You need portfolio construction, you need quality, you need profitability, and you need growth, right? When you put these together, what you get is a proper or a product which actually gives you end-to-end execution, right? Because you're not just looking at companies to invest in spotting companies. You're also looking at constructing these companies into your portfolio at adequate allocation levels and at optimal prices, because all these companies are big companies where the valuations are not always going to be cheap, because they've proved themselves in the markets, and there is a certain valuation that these companies deserve, and these companies get in terms of the broader market. So we need to be very, very careful with our invested, our buying value with respect to these companies, to make sure that our long-term performance goals are met. So portfolio construction in you'll have a set of or a concentrated of set of 18 to 20 stocks which are big companies in nature and big companies in size which have actually already have a good stronghold in the market. So what we need to do is we need to make sure that we capture them at the right price, at the right time, at the right allocation. And quality is infused, right? Like we already had mentioned, quality is something that we take into consideration, and not just the in terms of performance of financial, not just financial performance, and also the management quality, right? It becomes increasingly important. Like in the case of Yes Bank or DHFL, that was always there, right? These kind of companies always had their own corporate governance issues, or always had their asset quality issues. All that were part of the game already. Though even when they were called blue chips, they were always had those problems. So what we say what we mean when we say quality is not just financial performance, it's going to be other qualitative aspects like management quality and the way they treat small shareholders and their compliance requirements if they are meeting them regularly. All that comes into play when you evaluate a company in terms of corporate governance. And obviously, profitability is going to be a very strong point. And as you had seen, we have the 22% profit pool of the Nifty 500. So it's a highly profitable universe that you're getting as part of your TrueBlue portfolio. And growth, right? See, usually what happens is there are a lot of companies which are perfectly good companies. They'll tick all the requirements in the checklist. They usually are well established and high quality companies. But then what market always wants you to, or what market always wants a company to do is deliver on growth, right? If market rewards, I mean, market definitely rewards growth more than anything else, because what it needs is certainty, right? It needs certainty that this revenue is going to be generated, these margins are going to be generated for the foreseeable future. So for that, the company must convince the investors that this growth is going to be delivered through a set of these initiatives, and only then the market will reward the company with the respective valuations. And the True Blue promise is very simple. What we're going to be buying is high quality, scalable blue chips, right? These are going to be high quality blue chips, which is why it is does we make a very clear distinction between I mean, blue chips and high quality blue chips, because it is important in today's world to make sure that every other item in the checklist is ticked off before you invest into a specific idea. And we buy highly profitable businesses, and we ensure long-term wealth creation, right? So when most of us talk about long-term, we talk about in terms of 3 or 4 years. But what we actually mean by long-term is 5+ or 6+ or 7+ years. And that is when you make your huge bucks, right? That is when you let compounding do its magic into companies which do not require a lot of, though they require consistent follow-ups with performance and with respect to how they're doing in different scenarios and all that. They do not require a lot of introspection in terms of portfolio. So when they tend to actually, when market tends to look at them in the long term, and when their sustainability in terms of earnings, when the certainty in terms of earnings keeps going up, right, market will tend to reward them higher and higher. And that's when you make your big bucks, and that's when you create wealth in the long term. What do we intend to capture? Like I had mentioned in the previous slides, it's capturing mega trends, right? It's a combination of India's growth story plus global champions, right? So what we exactly mean by India's growth story is we have seen the numbers, the latest GDP numbers. They've surprised everyone. I mean, they've surprised the global economy as such, because we have over delivered. So those are the kind of India is one of the India is one of the if India was a company, right? If India was an organization, we would definitely be very interested to invest into India as such, or rather, we are investing into India. But then, if it was in the form of an organization, that is something that we would be very, very bullish on, primarily because they under promise and over deliver, right? That is what has happened with the recent GDP numbers. And when we have such a such a growth story with India's backing, we will need to just look at global champions within India. We will look at in terms of corporate India, and we just have to make sure that we place our bets into those companies, high quality companies, which are delivering numbers sustainably, and then wait it out, right? So you will get a good chunk of India's growth story in terms of corporate India, which will sustainably grow over a period of over the long term. And this is something that we would want to show you what we delivered in since our inception, the numbers for your viewing, right? If you look at our numbers in the last 1 year, right, when the markets have actually done 13%, we've done 16%. So our since inception numbers are a little behind with respect market has delivered since inception. But then we have a very, very concentrated portfolio in terms of our large cap portfolio is a very, very concentrated large cap portfolio. What we mean to say by that is if you look at a Nifty 50 or a Nifty 500, there are very, very skewed indices, right? What happens is a specific set of stocks which have an or maybe a 5 to 6%, 5 to 6 stocks out of the Nifty 50 contribute around 50 to 60%. So the point that we're trying to make is when these 5 to 6 stocks stop performing in the Nifty, your underperformance is bound to show in the index, right? So what we do in terms of TrueBlue is totally different. We do not go we do have heavy allocations, we do have high conviction bets, but then we do make sure that the attribution levels are optimal so that you get a very good portfolio, very albeit concentrated, you get a very good portfolio in terms of capital allocation, and it is not very, very skewed when it comes to like how it is in the broader indices. So with that in perspective, let's talk right now. Any questions, you can put them out in the chat box and I'll be happy to answer them. Thank you.
Hello, Ganesh. We have received a question there.
Yeah.
Chat box.
Yeah, the first question from Mr. Vijay Todur, have you compared the performance of TrueBlue with large cap MFs? Yes, we do have a comparison with large cap MFs. So we shall ask one of our representatives to get in touch with you after the meeting, where they'll give you a comparison of different large cap mutual fund portfolios and how TrueBlue has actually performed against them. I'll get in touch with you, sir. Hope that answered your question, sir. Thank you, sir. Any other questions? Okay, the second question from Mr. Vijay, also with respect to returns, have you taken your service fee and brokerage into consideration? Yes, sir. So the returns are net of fees and charges. And with respect to brokerage, we are not brokers as such, we are just portfolio managers. So our service fee is the one which is incurred, or rather, if you look at the fees that is being taken by us, it's only our management fees that we've taken. The brokerage, all that goes to the respective vendors, right? With respect to brokerage or with respect to STT or with respect to transaction charges, it goes to the respective vendors. But then these numbers that you saw on the screen are taking into consideration all our management fees, service fees, and brokerage and other transaction charges and whatever charges that has been incurred on your portfolio except capital gains tax. That will be at your end. Except for capital gains tax, all other charges have been taken into consideration before calculating the screen. Hope that answered your question, sir. Okay. Can you ask your representative to explain how taxation works, difference between PMS and MF? Sure, sir. I'll ask them to explain. I'll ask one of the advisors to give you a call and give you a good brief explanation. Do we have any other questions? If you have any other questions, it's okay. Another question from Mr. Vijay. What is the difference between mutual funds and expense ratio and your service fee? So if we have two options with respect to our TrueBlue scheme. It's one is a 1% fixed fee option where it's on the this is a fixed fee and there is no variable portion on this. And option two would be a variable only fee, which is 20% of any profits which is made over and above 6%. And this is based on high watermark before we charge you for any fees, right? Before we charge you for our service, we would want you to get the basic inflation rate, long-term inflation rate of at least 6% before we charge you for it. So there are, for a person, for any investor who wants a fixed fee option, right? Just a 1% fixed fee is what we charge. If the investor doesn't want to pay us higher fees when performance goes up. And for investors who do not mind paying this 20% over and above 6%, they can choose the other option. So we have two options. One is a fixed fee option of 1% and a completely variable fee option of 6% hurdle rate. And this high watermark compounds. So if you look at the difference between mutual funds expense ratio and our service fee, it needs to be specific. So because most of the mutual funds, if you look at large cap mutual funds as such, if you wouldn't get a proper 100% large cap mutual fund, lose the is 100% large cap where we buy only large caps. You can check out other mutual funds which claim to be large cap but do not, but they do have a good amount of allocation to small and mid caps as well. So on the risk management part, we score a lot higher than those mutual funds. Can always be a different call because each mutual fund's expense ratio is going to be different. And with that in perspective, I think the quality of the portfolio is what needs to be compared. Any other questions? You can type them out in the chat box and I'll be happy to answer them. Tarun, can we wait for maybe 2 to 3 minutes? And if there are no further questions, we can close the meeting.
Sure, sir. We can do that. Yes.
Okay, I think there are no further questions. I think we can close the meeting. And thank you all for joining us today on a Saturday morning once again. And hope to see you in future because we are going to be doing a lot of these webinars in the future as well. And we believe that with respect to whatever we want to offer to the society, right? Whatever we want to offer to the overall investing community, we would need to, because we still can have a great product, but it is important that we go out to the public and go out to the society and make sure that all of the investment or the relevant investment community gets to know what we do. And we are going to be continuing to do these webinars. So hope to see you all in future. Thank you for joining us today. Thank you.